Good evening, Board of Directors. We're the Ferris Industry Management Team. I'm Shane Evans, COE, Chief Officer of Everything.
I'm Tyler Patel. I'm the Chief Operating Officer.
I'm Brenna Brooks, and I'm the Chief Marketing Officer.
And we put this video together to show you exactly what we've done with your investment in the company and why we feel that we would be the great management team to keep this company going forward. Enjoy.
I'll be discussing Ferris Industries' vision and mission. Our vision is to become the premier sensor supplier in the industry, and our mission is to provide a quality product at a competitive price for all of our customers in each market segment, and also to maximize shareholder and company returns. So in line with our vision and our mission, our primary focus is to maintain control of the high-end, the size, and the performance markets. Secondarily, we want to continue to generate a profit from the traditional and the low-end markets. So in line with our primary focus, which is maintaining control of the high-end, size, and performance markets, we had a few things that we wanted to focus on within that primary focus. So first, we strive to keep the product at an ideal position in the industry. Secondarily, we wanted to focus on a higher mean time before failure in the performance market, and we pursued aggressive marketing strategies in order to make our customers more aware of our products and how they were beneficial in regards to our customers. So our secondary focus was to continue to generate a profit from the low end and the traditional markets. In order to do that, we kept our prices for these two markets at a lower level than our competitors, which we thought was very important in order to be able to maintain our market share in those segments. Also, we increased our internal capacity for future sales growth. We felt that this was important to do ahead of time so that in the future, if we increase sales, we wouldn't have to go back and retroactively increase our capacity. We would be ready to meet the new and increased demand. We also engaged in aggressive marketing techniques for these two segments as well, and we increased our automation levels in the low market. Again, we felt this was imperative for us to do in order to maintain profits in this segment. To finance our growth, we had a kind of a two-pronged strategy. First, we used long-term bonds to finance our growth in the first 4 years. This severely reduced our debt and allowed us to increase net income in the last 4 years. Our second pronged strategy was to use stocks to finance our growth, which resulted in our team having the highest market cap of $425 million. Once the market became a red ocean, we introduced 3 new products. This was in response to some of our competitors having introduced new products as well. We retooled our company to maximize our balanced scorecard, and this resulted in Ferris Industries remaining in the 90th percentile for the last 4 years. Another strategy that we undertook in order to maintain our position in the industry is to invest in HR. We thought that investing in our people and training them ahead of time rather than retroactively training them would be a great asset to us. So we invested in training, and that resulted in us having higher productivity, higher employee engagement, higher retention, and lesser turnover.
Now, throughout our rounds, overall, we had a very successful 8 years. In the first round, we did lose a bit of money for our shareholders, but that's only because we had to restructure the company to position it in the proper spot to make money in the long term. The second round, we ended up making our money right back. Back half of what we lost in the first round. The third round and the fourth round did come as a surprise to us. This was due to the creation of a red ocean in the traditional low-end market that caused us to keep a lot more inventory than what we expected. This severely dropped down our net income, and we weren't able to sell, so we didn't sell any more shares in these 2 rounds until we could make the money back. So our share price ended up dropping all the way down to $1 per share with a market cap of about $3 million. However, in round 5, we created our strategic plan that Brenna already spoke about to reposition the company to make more to bring back this money into the company. So in round 5 alone, we generated enough money to more than make up for the money we lost in the previous 4 rounds. We kept this growth up throughout rounds 6, 7, and 8, in the end generating a $3 million return on investment for our shareholders. What's that, 300 million? Oh, $300 million in shares. Now, you scroll down here, look at our net income. Let me switch over here. You'll notice that throughout the years, our net income progressively grew. In the beginning, of course, it was negative, which we did expect this due to the whole repositioning of the company, increasing SG&A costs, things like that. But then come round 2, we end up making the money back. And as I mentioned before, round 3 and 4 came as a surprise with us using an emergency loan to bail ourselves out because most of our inventory was kept on hand as inventory, of course. But we ended up making this back between round 5, 6, 7, and 8. If you notice even further, our percent of sales actually grew over the 4 years, as did our EBIT, which is a very positive thing. In the end, we made a total of $112 million in terms of net income for our shareholders. This came from a $2 billion net sales revenue. This is definitely incredible because no other company in the industry was able to keep up with this. No other company sold $2 billion worth of material. Only we did, because Ferris Industries is the best.
Ladies and gentlemen of the Board of Directors for Ferris Company, it's our pleasure to have you here today to let you know about the great results that we have created and what future steps we're going to take. As our COE, Shane Evans, has shown you, we did well financially. We did very well financially compared to our competitors. But what I'm here to speak about is what we want to do in the future to create further shareholder wealth, how we can serve you better. At this point, we have a dominant position in the market. We have the most cash coming. We can invest invest a lot. Right now, just to keep a leverage manageable, we're taking on more debt than necessary. We're giving out more dividends, which is a good thing for shareholders. But we're trying to work around maintaining an adequate leverage. What we want to do is actually invest further so we can increase our profits. An area we can do this is actually acquiring another company. And companies such as Baldwin, Erie, Digby, they're good companies to buy. Erie is a company that's weak and can be bought at a low value. However, we feel Digby is the best choice. Digby is number 2 in the industry, but we feel it is not well managed financially. Therefore, by acquiring Digby, we feel that we'll be able to create immediate return for our shareholders. Also, by leveraging the brands that Digby has, we can be dominant in every segment of the sensor industry. Another way that we feel we can grow shareholder value is through diversification internationally. Shane Evans, our COE, is taking on a Capson Global Challenge. He's going to go to China and develop this market, extend our company into China. We believe this is a great advantage because China is likely to be, in the next 5 to 10 years, as good a market for sensors as our domestic market, and maybe even greater. Therefore, we feel these 2 steps are great for the company, great for shareholder value. Therefore, we hope you will retain us as managers for the company. Thank you.
So in closing, we believe that we've presented a great strategy. We believe that we've had great results. We've been on top of the industry, and we believe that we're the correct team to lead this company going forward. So thank you for your time.